Welcome to LCTV. Today we've got a panel discussion in regards to the new anti-money laundering laws, and on our panel discussion today we've been joined with some very influential guests within the industry and the associated government bodies in regards to the new anti-money laundering laws. And with that, I'd like to introduce Liz Atkins. Liz is from Austrac. She's General Manager there and also is a member of the Executive Committee. We also have Tim Phillips from Deloitte, who's the Asia Pacific lead partner in the Forensics Division. Welcome. And Andrew Woodger. Andrew is a finance broker based in the Southern Shires of Sydney and has a business that extends interstate. And we'll be looking forward to Andrew's insights as to how this is going to impact the mortgage industry or the brokering industry. I'd like to start with just do a quick background as to how we've come to this point with this group. Obviously, with the Finance Brokers Association's involvement, we've been very fortunate to formulate a relationship with Deloitte, which we started back in December 2005. And once the legislation was given its royal assent and was motioned into the marketplace, we've been working very closely to ensure that we opportunely assist brokers to comply with the legislation as it gets rolled out, and as D-Day gets closer, as we get towards the 12th of December, where people need to have certain levels of compliance in place. So what I might do, Liz, are you able to give us a little bit on what is AML?
Money laundering is the process of disguising the proceeds of tax evasion and other crimes so that they look like legitimate funds. The Walker Report, recently published, estimates that money laundering in and through Australia is around $4.5 billion per year. I'll go into a bit more detail about what money laundering is in terms of placement, which is getting money into the financial system, for example, by depositing the proceeds of crime into an account or by buying securities with the proceeds of crime. The money is then layered to start the disguising process. Someone might do that by borrowing against those securities, and then the funds are integrated into the financial system, perhaps by using the proceeds of crime deposited in the account to pay the loan off.
Well, what has Australia done then in regards to tackling this problem? Obviously, we're not talking a couple of cents here or there. It's fairly extensive.
Well, as I said, the latest estimates in recent weeks are that in 2005, approximately $4.5 billion is the amount that's laundered in and through the Australian financial system. What have we done? The most recent thing we've done, as you've already mentioned, is to pass risk-based legislation to update our anti-money laundering framework and to ensure that we meet international standards. The new Anti-Money Laundering Counter-Terrorism Financing Act, together with a second tranche of legislation that's currently being developed, will ensure that we are compliant with the Financial Action Task Force recommendations on anti-money laundering and the special recommendations on terrorism financing. The new legislation applies to anybody who provides a designated service, so it's activity-based, and the relevant items of the designated services list for brokers' purposes are probably item 6, making a loan, and item 54, where a designated service such as a loan is arranged by an Australian financial services licence holder.